Welcome back to The Explainer. Today, we're completely cutting through the noise of the ABS market to give you, the polymer processors and buyers, a crystal-clear, actionable strategy for mid-August 2026. You know, when you finally visualize the data, the market suddenly stops looking like total chaos and actually starts looking like a roadmap. Let's get right into it.
But right before we unpack the raw numbers, we've got to address the elephant in the room, right? That massive pain point we all face in this fast-moving industry: delayed market intelligence. Think about it. How exactly do you stay ahead of these wildly volatile polymer prices when the data just keeps shifting? Waiting around for those end-of-week summaries? Yeah, that just doesn't cut it anymore when your margins are this incredibly tight.
Well, the solution to this agonizing delay is Polymer Bazaar. They've built a WhatsApp chatbot that acts as an absolute powerhouse of a tool, instantly delivering crucial market updates straight to your phone. It completely cuts out the noise.
Seriously, by simply texting ABS on WhatsApp, you unlock 24/7 access to real-time pricing, company price lists, and forecasts in literally under 5 seconds. Actually, this instant data is exactly where we're drawing our deep insights from for today's breakdown.
Okay, moving on to global ABS market trends, a geographical tour.
When we look at conditions across the US, Europe, and China side by side, it reveals this really complex collision. Dull demand is basically crashing headfirst into rising production costs. The story shifts drastically depending on your time zone, so let's break this down region by region.
Starting off in the US bazaar, prices have been, well, entirely stable at 87 cents per pound. No movement there.
And this pricing stability in the US, it isn't some great mystery. It's the direct result of unchanged production costs meeting a persistently dull demand from buyers. There's zero major push from raw materials and absolutely no major pull from consumers. It leaves the entire market effectively stuck at a standstill.
Now, crossing the Atlantic to Europe, we run into a really fascinating anomaly. Feedstock costs surged. Specifically, the August styrene contract jumped by a massive €150 per metric ton. But get this, FFID NWE prices actually dropped by €70. Wild, right?
So, despite imports becoming noticeably costlier across the board and feedstocks shooting straight up, this bizarre market contradiction pushed the final European price down to €1,895 per metric ton. What we are seeing here is a prime example of demand destruction completely overpowering cost-push inflation.
Meanwhile, over in China, the script flips entirely once again. Rising production costs are severely squeezing manufacturers, threatening to push ex-works prices even higher. But buyers, they are pushing back hard.
This highly cautious, need-based approach by Chinese buyers has successfully kept spot prices hovering right at 9,800 RMB per metric ton. It's a classic standoff, really. Producers are desperately trying to pass on their costs, and buyers are just flat-out refusing to take on the inventory risk.
All right, let's zoom in closer to home, zooming in on India, August 2026 domestic highlights. For Indian processors, there's a glimmer of potential relief here. Overseas suppliers have officially lowered ABS import offers down to around $1,570 per metric ton for August shipments. This is clearly a strategic move to stimulate a painfully quiet market.
Adding to this local shift, the latest customs exchange rate update lowered both import and export USD to INR rates by 1.15 rupees. Now, that might sound like just a tiny fraction, but it alters the entire cost calculus. It makes imports just a little bit more digestible for local traders.
But look, despite those cheaper offers and better rates, we hit a massive bottleneck: the buying pulse. It remains incredibly sluggish, and the reason is simple. Finished consumer products are just sitting untouched on shelves. You simply can't buy raw material if you aren't selling the final product, right?
Because those finished goods aren't moving, processors are locked into a strict need-based buying strategy. They are flatly refusing to stockpile anything they don't immediately need, keeping their cash tight and their warehouses very light.
So what do we do about it? Section 3, Actionable Strategy and Purchase Recommendation.
Our main forecast based on all this data is that this persistent, sluggish demand is going to hit a breaking point soon. It might very well force domestic producers to lower their ex-works prices just to clear out their own clogged supply lines.
So, the absolutely crucial takeaway for you is this. The official recommendation for August is to hold the line. Continue with a strict need-based buying strategy. Please do not get tempted to buy in bulk just yet, because cheaper material could very well be on the horizon as producers finally bend to the lack of demand. As we watch these really dynamic trends unfold over the next few weeks, the lingering question remains, and I want to leave you pondering this: will domestic producers be forced to slash ex-works prices even further just to survive this global slowdown? Keep a very close eye on your Polymer Bazaar data to find out. Thanks for tuning into this explainer, and stay focused out there.